All right, so hi everybody. Nice to have you here for this webinar. We've got some exciting stuff ahead because Alan is the speaker that was supposed to come to us on March 16th when the whole world fell apart. So we're really happy to have him here now. Wanted to thank our sponsors for EO Minnesota, Great Plant Moody, Ide Bailey, Fidelity Bank, Insperity. Both of those last two will be speaking this week and next week. Patterson Tente, RBC Wealth Management, CLP Digital Marketing, and Vision to Traction. Just wanted to let you know about some of our upcoming events. This Thursday, we've got Fidelity Bank. Jeff Campbell's going to be speaking to us on part 2, working with your banker in times of economic uncertainty. So be sure to register for that if you haven't already. And then next week, May 14th, we've got the Insperity HR Pandemics box. Now that we're working remote, where do we go from here? So that's for the Minnesota members. May 14th, Wisconsin and Indianapolis are holding an evening event for couples. Dave Rendell is going to speak. He's the Freak Factor guy. So I hope everybody will register for that if they have not yet done that. May 18th is also a couples event, couples conversation in stressful times. And that's from 8 to 9. So hopefully you guys can put the kiddies to bed and have a nice couple of adult evenings during those 2 webinars. A bunch of more stuff coming up, so make sure you check out my signature. I've always got the registration links and upcoming events there. So with that, I will turn it over.
Great, thank you, Glenda. And I'd like to introduce Alan Miltz, the co-founder of Cash Flow Story and the co-author of Scaling Up. We are super lucky to have him. And I understand that he was coming in March, but was driven away probably because of our great weather here in Minnesota that he wanted to stay in Australia. And Glenda is our co-host today. She will be fielding questions. I encourage everybody to ask questions under the Q&A section. And we'll be answering questions at the end of the webinar. So, Alan, why don't you introduce yourself and we can get started.
Thank you so much, Brent and Glenda. And absolutely correct. I was looking forward to coming in March, but I've given my commitment to come back when international travel is allowed. So I'm sure some of you are trying to work out where my accent comes from. I'm actually from South Africa originally, and I'm a chartered accountant and have a banking background, but have been living in Australia now for about 27 years. And I've dedicated my career to making numbers simple. So my original company, which I started up, has now become one of the biggest banking systems in the world. Basically, what we realized was we, company, speak one language, the bank spoke another language, and the accountant spoke another language. We spoke Spanish, your bank spoke Portuguese. Every bank was either using S&P or Moody's as their analysis tool. And 3 young immigrants to Australia took on Moody's and S&P. We raised private equity from Australia's wealthiest family. 20 plus years later, my system is used by over 500 of the global banks, tens of thousands of companies, and thousands of accounting firms in about 30 countries. In the US, we've got about 300 banks, including banks like Wells Fargo. So we successfully took on Moody's and S&P. The biggest mistake I made was I sold the company 6 years ago, because today it is one of the largest banking systems globally. As Brent said, I'm a co-author of Scaling Up. I wrote the cash component, and I'm a founder of a technology system called Cash Flow Story. And because EO has been family to me, for 3 months, at absolutely no cost, every technique you're going to learn today, you can implement in my system. So download the technology at that website. My notes will be sent to Glenda, but all my system, all my techniques can be implemented absolutely straight after this talk, and you can use Cash Flow Story as the medium to deliver all the concepts. This is what we're going to learn over the next hour. And when I come to your chapter, later this year, hopefully, I will spend 4 hours doing a masterclass, and you need to bring your management team along as well. We're going to learn how to create a one-page financial scorecard. And our scorecard is like reading a book. It will consist of 4 chapters. There are 3 cash flow measurements I look at every month, the big 3 cash. Once we understand the cash flow, my next area is how do we improve it? And that's called the power of one. The future is very different to the past. How do we project? And then how do we stress test our numbers? So this talk is absolutely practical. Your brains will be on fire. But as Vern Harnish says in every talk, the traits of a good leader are the ability to predict, ability to delegate, and then repeat, repeat, repeat. So all my important concepts, I will repeat 1 or 2 times to make sure the concept has been passed over. So as I said to you, I'm a co-author of Scaling Up. I wrote the cash component, but obviously people, strategy, execution are absolutely key to your business during COVID-19. So if you haven't read the book, it's a must-read book for every EO person. I'm going to choose an EO company as a case study. It's an actual company. Every word is correct except for the name of the company. MILOK is based in Australia, and we import and distribute hair care products. We sell shampoo, conditioners, and we supply the hairdressers, the beauty salons, and the pharmacy. So in March 2020, Australia went into lockdown. Hairdressers closed, beauty salons were shut, the pharmacies remained open, our business got decimated. We employ 55 people, and until March 2020, business was great. So let's start off going back to December 2019 to have a look at the MILOK Group. Revenue grew from 21.5 to 24 million. Revenue was up by 12%. Operating profit. This is the profit number your management team needs to focus on. It was up by 22%. So operating profit is your profit before interest and tax. MILOK did a brilliant job. After interest and tax, we made 1.5 million profit. I'm going to start and end the same way today. Revenue is vanity, profit is sanity, cash is king, and I need to say queen. Ladies and gents, every single EO company I walk into tells me the following, and this is what George MILOK tells his company. Revenues up by 12% or 2.5 million to 24 mil. Every period we are growing our margins, and every period our operating profit is improving. Ladies and gents, MILOK is ecstatic. I'm going to ask you a more important question. What is the net cash flow of MILOK in the 2020 year? MILOK made 1.5 million profit. I want you to put the answer in the chat box. We've made 1.5 million profit. What is our cash flow? And there are absolutely no tricks to this question. If I was sitting on the board of your company. And today I sit on the board globally of about 15 EO companies. The question I always ask is, MILOK, you made 1.5 million profit. What is your net cash flow? And in the chat box, I want to get 1 or 2 answers, please. What is the net cash flow over the last period for the MILOK group? So Johnny has put 300,000. Patrick has put 1 million. Ollie has put 2.7. I would assume that's million. And Kilby has put 0. So brilliant. Thank you so much for contributing. Cash flow is a concept that the accounting profession absolutely overcomplicates. Cash flow is actually explained in the most simple way. Cash flow definition number 1. If you start the year with $10,000 in your bank account and you end the year with $1,000 left in your bank, and I said to you, what is your cash flow? All of you would say it's got worse by 9,000. Cash flow definition number 1. This is the KPI of you, CEO. Net cash flow can be calculated in 30 seconds in any business. The definition is, what is the change in my bank accounts plus borrowings. So all I do every single week when I'm having meetings with my companies I'm working with, I want to know what's the movement in all their bank accounts. MILOK, cash at the bank has not moved. Short-term debt has got better by 300K. We've repaid the bank 300K. And long-term debt, which is also part of the bank, has not moved. So Johnny, absolutely well done. You're the first person to have given me the right answer in a long time. The net cash flow of the MILOK group is positive 300K. So if I was sitting with this company in a management meeting and they said to me, revenue, margins, profit is up, business is great, my next question is, what is your cash flow and why is there a gap of 1.2 million between your profit and your cash flow? As you saw earlier, I had about 7 different answers looking at one business. And this is happening business after business. You are looking at your company and everyone is interpreting it differently. My rule in every company is no surprises. Cash flow is a major gap in business. And the reason for this is as follows. We all understand the profit and loss. We understand it with great clarity. Revenue, margins, operating profit, net profit, you will all read it consistently. The problem is the balance sheet is misunderstood. The accounting profession, as I said, which I'm part of, has complicated cash flow, has complicated the understanding of the balance sheet. If I am a good leader, one of the things I need to do is to listen with empathy. I need to listen to my management team and explain things in their shoes. Your management team are not accountants. We've got to make them understand the score. Your business is no different to a sporting match. The score of your company is cash. People need to know your score, and then we need to give them the tools to improve your score. So your balance sheet can be explained in one sentence, and the sentence is funding equals operations. Funding equals operations. So funding consists of two components, either debt or equity. So if we look at MILOC equity, it's in your balance sheet, is 4 mil. What is the debt or the net debt of MILOC? We've got 1 million long-term debt, 2.8 million short-term, that's 3.8 million, minus the 100,000 cash in the bank. MILOC's got 3.7 million of debt. MILOC has therefore got 7.7 million invested in his company. Funding equals operations. It has to balance. Your company has to balance. It's no different. You buy a property for 7.7 million. You put a deposit of 4 million and you borrow 3.7 million from the bank. Now we need to be a bit more granular. Operations consist of two components which I'm going to describe. Working capital and the rest of the balance sheet I just call other capital. So working capital is absolutely the domain of your management team. Working capital consists of three items: accounts receivable plus inventory, or in a service company, we call it work in progress. In other words, work you've done, but not yet invoiced to the client, minus accounts payable. So working capital is measured in days. When I run my weekly meetings, I want people to know, how much do people owe me? What are the days? How much inventory or work in progress do we have? And how do we pay suppliers? So working capital consists of accounts receivable, 5 million, inventory or work in progress, 3.2 million, and my accounts payable are 3.5 million. My working capital equals 4.7 million. Working capital is measured in days. I want to know how much is in my receivables, inventory, and payables. So MILOC, of that 7.7 million, we've got 4.7 million in our working capital. So therefore, other capital has to equal 3 million. Your balance sheet has to balance. The rest of your balance sheet I call baggage. These are the myriads of technical terms that the accountants measure. Accruals, prepayments, provisions, deferred tax, other current assets and liabilities, investments, assets, etc., etc. MILOC is a very simple set of accounts. I've got one item in other capital being my 3 million of land and buildings or a warehouse. So let's summarize, repeat some of the key concepts we've learned today. My first message to all of you is it's never been more important to understand your numbers. I'm getting a phone call every hour of every day from someone around the world, and it starts with cash. Your whole management team needs to understand your story in a consistent way. We're going to be making decisions that will impact our business. We need to be able to communicate internally and externally with no ambiguity. So I said to you, revenue is vanity, profit is sanity, cash is king. And for gender equality, which is so important in Australia and the US, we have to add queen. Cash is king or queen. I said to you, there are three critical cash flow measures. You, CEO, are responsible for measurement number one. What is my cash flow after everything's happened? It's the change in all bank accounts, including cash and borrowings. So I said to you, how do we calculate it? Start the year with 10 in the bank, end the year with 1,000 left in the bank. Your net cash flow is -9. Now, the same concept can be applied to a business. I want to know every week, every month, every quarter, at the beginning of the period, what were all my bank accounts? At the end of the period, what were all my bank accounts? MILOK net cash flow is the movement. You made 300,000. MILOK, you made a net profit of 1.5 million. There's a gap of 1.2 million. I want to explain the numbers to my management team in the most simple way that everyone will get it. So I said to you, your profit and balance sheet are equally important. A balance sheet can be made simple. And the logic is funding equals operations. Debt plus equity is the way you fund business. MILOK'S got 4 million of debt, and MILOK had 3.7 million of, MILOK had 4 million equity and 3.7 million of net debt. MILOK has therefore got 7.7 million invested in the operations. Operations is segmented into 2 components. Working capital, which were 3 items, receivables plus inventory or work in progress minus your payables. MILOK, your working capital was 4.7 million. The rest of your balance sheet therefore has to add up to 3. In one sentence, I can explain the balance sheet to your people. We've got to listen to them in their shoes and take the complex accounting terms out of your explanation. So now I'm saying to you, MILOK Group, let me explain your business. On the 31st of December, in one sentence, this is your balance sheet. At the end of the period, MILOK, because the movement in your debt is your cash flow. At the end of the period, MILOK, you've got 3.7 million debt. At the beginning of the period, your debt was 4 million. MILOK, we've made 300,000 cash. MILOK also made 1.5 million profit. MILOK's closing equity is therefore 4 million. So if you said to me, Alan, explain to me what's happening in MILOK'S business. Funding equals operations. Well, funding, we left 1.5 million profit in the business. That's the growth in your equity. MILOK has repaid the bank. MILOK made 300,000 cash. So MILOK has repaid the bank 300,000. From a funding perspective, we've reduced debt by 300K. MILOK, your funding, you made 1.5 million profit. We repaid the bank 300 million. You've increased your funding by $1.2 million. Funding equals operations. I would have had to have grown the operations by 1.2 million. Where did I spend the money? You've made 1.5 million. You then repaid the bank 300K. You've got 1.2 million of increased funding. So if we look at MILOK'S business and see where did MILOK spend the money, because funding equals operations, and operations is segmented into working capital and other capital. So let's look at working capital. 3 items. Receivables, up by $1 million. Inventory, which is working capital, up by 700K. And my payables has grown by 500. Working capital is receivables plus inventory minus payables. My working capital has grown by 1.2 million. And MILOK, your other capital, which in your case was 1 item, did not move. You did not spend any more money on your other capital. So if you said to me, Alan, explain what's happened in the MILOK group over the last period, I'm saying to you the following. We made 1.5 million profit. We repaid the bank 300,000 out of the cash flow we generated. We spent 1.2 million on working capital, and we didn't grow the other capital of the company. Every company listening to me today wants to improve the cash flow. This is the result of a business. Other capital has got nothing to do with your management team. Working capital is absolutely controlled by your management team, as is the profit of your company. So therefore, what am I doing every week, every month, every quarter with my management team? I'm repeat, repeat, repeat. Management team, this is what our business looks like. What can we do to grow our profit? What can we do with prices? What can we do with volumes? What can we do with cost of goods? Or in a service company, what can we do to better utilize our people? How can we look at every line item of the overheads, item by item? If you're making losses, how do we reduce the losses we're making? Management team, what can we do to collect faster? Can we give credit terms? Can we start to follow up companies before the money is due? Be absolutely ruthless with the rules, the way we educate companies. What can we do to better manage our inventory? Or in a service company, invoice more frequently, invoice in advance. And what can we do to pay our suppliers differently? So what am I doing? So for example, in MILOK, if we only grew the working capital by $1 million, your balance sheet has to balance. You would have made an extra 200K cash. So what we're doing is we are absolutely ruthless in trying to make your company more money. I said to you, on one piece of paper, I can explain any company's financial story. And it's a story told in a logical 4-chapter approach. MILOK, chapter 1, you made 1.5 million profit. You then spent 1.2 million growing chapter 2. Working capital are your 3 items, receivables plus inventory minus payables. What has changed? Chapter 1 and chapter 2, repeat, 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 are the KPIs of the management team. We didn't spend any money on other capital. Can you now see why we only generated 300,000 cash? MILOK, you cannot read a book. Your business is no different to a murder mystery. You cannot read chapter 1 and expect to understand chapter 4 cash flow. You've got to go through it in a logical way. Chapter 1 and chapter 2 are the KPIs of your management team. Did we spend any money on other? What was your cash flow? So I said to you at the beginning, I want to show you on one piece of paper how to explain your cash flow to your people. It's a 4-chapter story. Chapter 1 is profit, 1.5 million. Chapter 2, working capital. We grew it by 1.2 million. We spent 0 in other. We've now generated 300,000 cash, which reduced our debt. Now, I heard from Glenda earlier that Fidelity Bank is coming in. This is what has frustrated me right around the world. Business and banks speak a different language. We speak Spanish, your bank speaks Portuguese. Every single business I go into is talking about profit. Every bank I walk into is talking about debt, service, capacity. In other words, do you business have cash flow to repay us? MILOK owes the bank 3.7 million. The bank would be looking at their cash flow in terms of, do you have enough cash, MILOK, to repay your debt and repay your interest? The banks are throwing money globally at business. Eventually, you're going to have to repay them. If you want to understand Spanish, if you want to understand your bank, you better speak 4 chapters. Chapter 1, profit. Equally important, chapter 2, working capital. What happened in chapter 3, other capital? The result is cash flow. Now, this is what I'm telling companies around the world. The bank knows your cash flow every day. It's the movement in your bank accounts. If the bank is worried about you, it means you've got a cash flow problem. It means you don't have enough cash to repay them. You need to go back to your bank and give them solutions in chapter 1 and chapter 2, how to fix the problem. Chapter 1 and chapter 2 are the inputs. This is the way you run your business. If you've got a problem here, fix it through a combination of those 2 items. People say to me, the bank doesn't understand my business. I'm saying to them, the bank knows your business better than you. They understand cash. You don't understand cash. Become a 4-chapter storyteller and you'll understand the bank. So it's absolutely critical. And the other message I'm telling every business is the bank is your partner. Funding equals operations. MILOK, your partner's got almost $1 for $1 compared to the money you've got invested. The worst thing you can ever do to your financier is give them a surprise. Banks don't understand about hair, shampoo, and conditioners, but banks understand about budgeting and forecasting. You need to show your partner that their money is in a safe set of hands. You know how to convert their money into cash and have got the capacity to repay. So what I've said to you is the profit and loss and balance sheet are equally important. Within the balance sheet, working capital, the 3 items are mission critical. Management team, you are responsible equally for chapter 1, profit, and chapter 2, working capital. This is what your management team is responsible for. MILOK did very well in profit. MILOK's got a lazy working capital. In all likelihood, your business has suffered as a result of the virus. Your management team's got a vital role to play. Now, in Vern Harnish's book, it's about people, strategy, execution, cash. I don't have time to cover it, but I want to make a comment. In the boards that I sit on, I've created a war room. I've brought together the senior management team, sales, marketing, operations, finance. We normally meet weekly. We're discussing all aspects of the business, including finance. My war room in every company I work with has been trained to understand the numbers in a simple 4-chapter approach. My war room discusses every single week the profit and the key working capital measures. What's happened with our revenue this week? What's happening to our margins? Are we getting pressure? What can we do to further improve our overheads in the company? Are we having any problems with our collections? Which customers? What can we do to mitigate it? Inventory discussions, or what can we do with our people utilization, our work in progress? Any opportunities to get better terms from our suppliers? By definition, if you've got people excellence in your business, we call it a team of A players. A players want to be happy, challenged, and winning. We need to teach our A players what the score is, and then we need to teach them the tools to improve the score, being the cash flow of your company, which I'm going to show you very soon. Operating cash is the KPI of your management team. Your management team are responsible for profit as well as working capital. So if we go to MILOK'S financials, MILOK, management team, you're responsible for profit. The profit number your management team is responsible for is operating profit. They are responsible for your profit before interest, taxes, dividends. MILOK, you made an operating profit of 2.3 million. MILOK, you are equally, as a management team, responsible for working capital. And MILOK, our working capital over the last period has grown by 1.1 million. Sorry, by 1.2 million. Receivables is up by 1 million. Inventory is up by 700K, and the suppliers grew by 500. Working capital has grown by 1.2 million. MILOK, even though you made an operating profit of 2.3 million, your working capital increased by 1.2 million. We've only made 1.1 million operating cash flow. So don't tell me we made 22% growth in profit. We had very poor working capital management, and it stole money from chapter 1. We've only got 1.1 million cash, even though we made 2.3 million profit. So let's go repeat, and have a look at what this means. Management team, as I said to you, you are responsible for operations. You made 2.3 million operating profit. You grew working capital by 1.2. You've made 1.1 million operating cash. Is this good or bad? We've got to teach our A players how to win. So now we've got to show them how to manage better. Cash flow, of which we've made an operating cash flow of 1.1 million. This is about the quality. Did we do a good job? Companies need cash to grow. MILOK grew by 12% in this period, but we also need money when our business is declining. We also need money if the management team is making decisions that are negative. For example, prices decrease, margins decrease, overheads grow too quickly, collect slower, inventory grows. We need to teach our management team to look at every lever. What can we do to increase our prices, grow our volumes, collect faster? Margins improve, etc., etc. So what I do is I show my management team in our meetings what has changed. So management team, compared to the last period, revenues up, margins are up. Why did we grow the overheads by 15% when our revenue only grew by 12%? Why are we collecting slower? Why is our inventory climbing? We're paying suppliers a bit slower, which is good for cash. I hate surprises. I've got no problem if the management team can explain these items. But normally, when I go into a business, the management team's got no idea what any of these numbers are. They just go into the meetings. As soon as we discuss finance, their brains switch off. We've got to improve your score. We've got to make people love the numbers. You've got to make it simple for them. So in other words, management team, if we converted this into dollars, we've made better margin. It's been a 1.2 million impact. Overheads grew too quickly. Receivables are slower. Inventory slower. That's had an impact of 2.8 million negatively on our cash. Yes, you've had some positives, but overall, management team, don't think you've done a good job. Overall, the quality of our cash has gone in the wrong direction. We should have made an extra 780,000 if we had run the business the same way as we did last period. Cash flow is the result of growth and management. Management team, that's your actual operating cash. This is the dollar value of bad management. This is what our cash flow should have been. How do we fix the problem? Well, the first thing I suggest you do is you create a profile for your company. Now, all of you could sit down with me and say, in $1, our revenue is $1. Our margins should be 40%, MILOK'S says, and we want to make 12% profit. We want to collect in 60 days, 50 days of inventory, and pay suppliers on day 60. Cash flow is the result of growth and management. Management either does a good job, an average job, or a bad job. So in MILOK'S case, good is greater than 40% margin. That's a green. 37 to 40%, yellow. Go below 37, a red. Make more than 12% profit, excellent. 10 to 12, average. Below 10, bad. Collect quicker than 60 days, green. 60 to 70, yellow. Greater than 70, red. I can then look at MILOK every month, and I can show the management team what is the quality of our work. MILOK, you're running your profit in color code yellow. You're running your working capital primarily in color code red. Can you now see, MILOK, why there's such a big gap between profit and cash? Run your business in color code red, we will never make money. We've got to teach our management team, the group of A players, to move to color code green. If you go to London and you get on a train, the announcement that is made when you get off the train is mind the gap. This should be a philosophy in our business. What is the gap we need to fix? We got a 2.5% problem, MILOK, in our profit. We got 16 days gap in receivables, 28 days gap in inventory. I want to teach you when you come to the meetings, give us strategies to move in this direction. If your business goes in that direction, money is going out of the door because of bad management. Cash flow is the result of growth and changes in management. Management team, repeat, repeat, repeat. You are responsible for profit and you're responsible for Chapter 2, working capital. Now, I'm not going to worry about cash flow measurement number 3 today, so we're going to skip that. But now is the most important concept I'm going to teach you, and I would suggest I'm going to make a big, bold statement. This is going to be the most important financial lesson that you've had in your entire life. This can be a game changer for your company forever. Never forget what I'm going to say now. So let me go just and open up a blank Word document. If I look at my career, I've had global banks adopting my system. Helped Vern Harnish in his book. But this is what I want to be remembered for. When I look at a set of numbers, I'm trying to think about simplicity. I'm trying to listen to your management team. Your management team is responsible for profit, and profit is revenue minus cost of goods or direct costs in a service company, gives me gross margin, minus overheads gives me operating profit. Your management team is also responsible for your working capital, the collections, the inventory, or the work in progress, and how you pay suppliers. The result of all of this is how they impact your cash flow. There are only 7 levers your management team can play with to fix cash. We can change revenue through price and volume. We can improve our margin by purchasing better, manufacturing more efficiently, or utilizing people's time better. We can improve overheads by micromanaging every single line item in your profit and loss. We need to educate customers about our payment terms. We need to have very strict inventory management or rules of how we're going to invoice more frequently in the work we do, and renegotiate with our suppliers. Sitting on the desk of every single EO Minnesota person from today is going to be the power of one. How many 1% and 1 day changes do you need to change in the way you run your business to fix your cash or improve your cash? Cash flow is the result of the 7 levers, the 4 levers in profit and the 3 levers in working capital. The power of one is the code of the company. There are 7 things we can do. We can change 4 profit levers, and we can alter 3 working capital levers. This is what the cash flow story software, and I'll show you how to implement it, will produce for you automatically. The power of one. This should be prominent in your management team room or your boardroom, wherever you meet. What does a 1% or 1 day change in your business do to profit and cash? MILOK increased prices by 1%, cash flow improves by 190, and profit by 240. Sell 1% more, cash improves by 43K and 90 in profit. MILOK, can you see that price is 5 times more sensitive than volume to cash? How can your salespeople not know this relationship? Your salespeople are going out giving discounts to sell more. It might be the worst decision for your company. MILOK, every day of margin is 147,000. MILOK, mind the gap. You got 2.5 problems there. MILOK, every day of collections is 65,000. You got 16 problems. You got 28 problems in your inventory. If all MILOK does is change 1%, their cash will improve by 594 and their profit by 547. MILOK will more than double their cash flow by changing 1%. Are you telling me every person listening today can't change a few 1% or 1 day changes in their business? So this is what MILOK would do. MILOK, and I suggest you do this quarterly, or if you want, you can even do it monthly. You have the following discussion. You go through each lever, and MILOK says, I can increase prices by 2%, and I can definitely collect 7 days better with more focus on my collections. Well, MILOK, that'll have an 840,000 cash flow impact, a 480,000 profit impact. This is the way I run the workshop. I take sticky notes, or you write on your whiteboard the 7 levers. You then give these yellow sticky notes to every person in your management team attending the meeting. You workshop line item by item, lever by lever. And when you've finished workshopping, you come back and you put your ideas next to each lever. Rank them from most to least sensitive. Then you choose 1, 2, or 3 ideas that are going to be implemented for the period. The power of one is the code of a company. There are only 7 things your company can do to improve your profit, your cash, and hence the valuation of your company. Make sure the power of one is embedded in everyone's brain. Every person in your company, every time they make a decision or quote on a project, should say, which of these levers can I push when I'm negotiating the deal? So let me go into cash flow story quickly, and I'll show you how quickly this is to implement. So when you enter and go to the website and download my software, which I said we're giving free of charge to EO for 3 months, the first thing I would suggest you do is you click on Stress Test My Business. And I also suggest that you base your power of one on the past 12 months. The software will then ask you to enter 6 numbers. These are all touch points in your accounts. Do not overthink it. So let's make up a little case study. Revenue 2 million, margins 1.2, and profit 200,000. Receivables 500, inventory 300, and payables 200,000. Click on save, and it's now produced the power of one for me for this particular small business. Make it 0, so now we can do stress testing. And let's say, for example, this particular company says we're going to be severely hit by COVID. We think volume will drop by 50%. We also believe people are going to start to pay us 30 days slower. Well, in this company, if you do this, your cash will get worse by 464 and your profit by 600. What else can we change? Well, let's pay suppliers 20 days slower. Let's reduce the overheads by 30% because our revenues dropped by 50. So it's plus because it's improvement. Well, if I put these changes in and I put the mitigants in, my cash flow burn will only be $120,000. I've now got various strategies which I've done stress testing on. Once you've done this, go and create a new client. So create a client, EO Minnesota. And within your client, you can have as many entities as you want. So in my business, let's look at MILOK, for example. In MILOK'S business, I entered the 3 years annual to start off with. Under Navigate, or I can just click the forward button. It gives me every single item I've taught you today. Give me a summary of the business, chapter 1, chapter 2, chapter 3, chapter 4, power of one. I can then go to reports and I can generate automatically. If I click on print, I can generate a board report, and it's done within a couple of seconds of entering the data. So every single technique, every ratio is automated in the software. Read, obviously, when you get the software, the guide, how to enter data, how to analyze the business. Within the software as well, I've also made, so when you go to the home page, you'll see a learning center. In the learning center, I've made a video for EO globally, a 30-minute video with all the techniques I've taught you today. So you can replay it to you and your management team. Let's go back to MILOK. Assumptions of the past no longer apply. In March 2020, MILOK was doing okay. MILOK got smashed after March. These are the quarterly numbers that MILOK has prepared. So MILOK has prepared the 3 months actuals, March 2020, and they've done a 3-month budget for the next quarter. MILOK says revenue will drop in the June quarter from 4.6 million to 785,000, 80% drop. In the March quarter, we were budgeting to make 260,000 profit, and it's now going to drop to $1.3 million loss. MILOK says, how much do I need to borrow from the bank? So I said to you, in one sentence, the balance sheet can be explained. Funding equals operations. Debt plus equity is your funding. MILOK's question is, how much do I need to borrow from the bank? MILOK, your equity is going to come down by 1.3 million. Your balance sheet has to balance. How are you going to fund this, MILOK? Are you going to fund it through working capital or by selling off some of your assets in other? So MILOK says, no ways am I going to sell off other capital. No benefit. MILOK says, let's look at my working capital. My revenue is dropping. Most of my clients have closed their doors. We only believe we're going to get $200,000 of collections in the next 3 months. MILOK also says we're not going to sell a lot of inventory because our revenue is very low, 300,000 drop. And MILOK then says my suppliers who have been so loyal to us are screaming. And out of ignorance, MILOK budgets to pay them 500,000 off their account. MILOK, you're not going to get any benefit from your working capital if you do this. The only way MILOK can fund this loss is go to the bank and borrow an additional 1.3 million. So MILOK goes to the bank and says to them, we're going to have a loss in June. We're going to probably need 1.3 million. The bank might say to MILOK, no ways. The most we're prepared to lend you is $1 million. Go back and stress test your budget. So MILOK then takes the power of one and says, I'm going to pay suppliers 20 days slower, and I'm going to reduce my overheads by 20% in the next quarter. So these are the changes or the stress tests that MILOK will apply to their budget, which will obviously mitigate or reduce the cash burn by $400,000+. MILOK can then go to the bank with the following power of one changes, resulting in the requirement for about another 900K. The last page of my notes, I've put down what I suggest you should do as a company as a next step. So I said, sign up for the software, run the quick stress test on your 6 numbers, then start to create a 2-quarter historical model. So enter into the software the March quarter and a budget, and the December quarter, just to get an idea of what's happening. What does your business look like? Chapter 1, Chapter 2, Chapter 4, and the power of one. Then we need to project forward for the June quarter and exactly what I've just shown you. Have a look at your profit, your working capital, your cash flow, and perform a power of one to determine the changes you need to achieve your desired cash. I said to you at the beginning, my talk today is not a talk on philosophy where you can walk away and say, wow, I feel better. You know, personally, I feel okay. What I'm trying to make you and your company is to understand the score and improve your score. Some EO chapters are taking 3, 4, 5 goes before this sinks in. You've got to replay my video. You've got to reread the notes. Ladies and gents, I absolutely guarantee you, you follow the steps that I've taken, your business will have a better financial outcome long term. So let's go to the beginning and have a look at what I said I'm going to deliver today. I'm going to teach you how to create a one-page scorecard covering 4 chapters. Chapter 1 is profit. Chapter 2 is working capital. Chapter 3 is other capital, resulting in Chapter 4, cash flow. I then said to you there were 3 critical cash flow measures. I've covered 2 today. Measurement number one was net cash flow. Net cash flow is the KPI of a CEO, and this is the change in all bank accounts, your cash plus your borrowings. Marginal cash flow measurement number 2. This is the cash flow of your management team. Your management team is responsible for profit and they're responsible for working capital. The profit number they were responsible for was operations. We made 2.3 million. We grew working capital by 1.2. We've made 1.1 million operating cash. I then said to you, the most important thing, or the most important lesson you'll ever have on finance is about improvement. There are 7 levers you can play with to improve all of these items. We've called it the power of 1. How many 1% changes in price, volume, cost of goods or direct costs, overheads, receivables, inventory, payables, or work in progress? How many changes can we make in those 7 levers? The past is very different to the future. We need to look at the future, the June quarter, the September quarter, and then we need to stress test our assumptions to see what can we do to improve our performance. I started today and I said revenue is vanity, profit is sanity, cash is king. I'm going to end the same way. So let's now open it up to questions. So let's go to the chat box. Can you now see why I chose MILOK as a company, a distributor of shampoo? Okay.
It's just if everybody can't see Alan, he has the same haircut as me. There you can see him now. All right, so we've got a couple questions. Jim, I think, asked early on about why not include AP in the beginning 2 portions of it, but I think you explained that.
AP funding, the way I reconcile cash is the result of your profit and your working capital. So AP is in your working capital changes. That's how I got there.
And then Stephanie Anderson asked for the URL of your website, and we'll give that at the end again.
Yes.
And Glinda will send that out. Johnny first has a. Go ahead. Sorry.
Any other questions, ladies and gents? I said to Glenda and I said to Brent at the beginning, my ideal is to do this over a 4-hour session with your management team in attendance. I promise you I will come to the States when this idiotic virus is over. So,
yeah, Johnny first has a question. How do you best analyze your AR days? Averages? We have a lot of late fees in there as well.
the whole thing is to understand what is the trend, because I'm looking at the movement. Cash flow is the result of growth and changes in management. What you're trying to do is to look at what is happening at the moment and what can you do to change the rules. So if you've got some long outstandings, do you realize what one day does to our cash flow? You'll then start to change the rules in your company. So when I had my technology business, which I've still got, we sold to banks, and the average dollar value of a bank deal was about $1 million. But when we sold to a company, it was about 2,000. We would never sell a product or a service to a business unless they paid us in advance. So you've got to look at your business, teach your company your rules, and then once they understand the rules, it's done. People are scared to explain, we will give you the best product and service. The only thing we expect you to do is pay us on time. You teach people, they will start to listen. It's repeat, repeat, repeat.
All right, next question from Scott. If you are calculating a net working capital for a sale, do you use the average TTM, trailing 12-month, or some other calculation?
As long as you're consistent in your calculation, I've got no problem. So the way you're doing it at the moment, whether it's a trailing 12 months or whatever, that's fine. But as long as you've got consistency, because I'm looking at what has been the change.
All right, I don't have any other questions yet. Last chance. Oh, here we go, Johnny. We have a service business, so most customers prepay, some pay later. How do I approach WIP? Is this the cost of the people providing the work? How is that different from COGS?
So let's say, for example, I am a construction company and I invoice for work that I haven't yet done. I've got negative work in progress, which is brilliant. It means you invoicing, that's absolutely ideal. If you can invoice in advance for work you haven't done, I just call that amount in my balance sheet negative work in progress.
Johnny has a follow-up. What do you use as the number in dollars?
I don't understand the question. The number in dollars is, so most service companies like legal firms or architectural firms, they never measure work in progress. It just is a number that sits outside of the balance sheet. My answer is it should be treated and measured because you want to start to show the people that it's expensive. It's a number that's basically sitting in your working capital that should be lower if you were more diligent. That we said we're going to never have more than 2 weeks of work we've done but not yet built. So it just creates a discipline in your company that when you do work, you invoice it. When you create a project, you've got more milestones in your project, you can invoice against. It's just a discipline in your business. I'm getting hundreds of EO companies sending me their financials, which I'm reviewing, and they haven't measured work in progress. I'm just saying it's good practice, just to show your team that it's expensive when we haven't invoiced the work. This is money that should be sitting in your bank account that is not sitting in your bank account.
And so here, Johnny has another follow-up about estimates. I think the work in progress for us as a service business would be the amount of work that we've done but haven't billed, not the amount we're going to do and haven't done yet.
No, Johnny's absolutely, this is the work you've done but you haven't built. Absolutely spot on, Johnny.
Okay, good. Yeah, I think that covers that one.
And again, anyone, please feel free to contact me at any time in Australia. Very happy to help.
Great. So I think the only answer, or the only thing we still have open, is getting your URL of the website again.
So let me just share my screen again.
So Patrick has a final question. What is a rule of thumb of how much cash a company should retain in the business?
Okay, so if you read Scaling Up, they say have 3 months of cash to cover your overheads. So 3 months of overheads.
Great. All right. Anybody else have a question? And I think if we have no more, we can let you have your breakfast.
Thank you so much to everyone, and g'day from Australia.
Yes, thank you for joining.
All the best. Bye.
Thanks, Alan. Talk to you soon.
Bye.